Hi everyone. Um, I'm just going to do a video here, or maybe a series of videos, on this revision pack that we had just before the Easter break. Um, and I'm going to start with the first question here. Is the mock 2022 Sole Trader question, question one, higher level, came for a couple of years ago. It's on question two of the revision pack here. But this question is also, or any of these videos are also quite useful for anybody who's doing ordinary level then as well, because a lot of these workings from higher to ordinary level do translate. Um, so a lot of the adjustments, obviously in higher level, are just going to be that little bit more in detail, but it will be some use for ordinary level question then as well, because the same technique is used all the time. So we go to question two of our pack. And straight away, what we have here then is the final counsel for sole trader. Now you're given a trial balance that we're very well used to looking at now at this stage. But the thing that you need to really remember is anything on the debit side is either going to be an asset or an expense, right? And anything on the credit side is either going to be a liability or income or a gain. All right, it just makes it a lot easier to be able to read what's going on with this trial balance if you can kind of get your head around that first. We're, as the same with all these question ones, whether sole trader, company, or manufacturer, we're going to be really doing the same bits and pieces all the time. So this question here, we're asked to do a trade and profit loss account for the year ended 2021, and then we're doing a balance sheet then as well for the year ended 2021. All right. Now, what we'll do is, first of all, the adjustments for part one here, right? Stock. But what we need to do first is just have a read of it and highlight the things that we really need here. All right. And what you'll notice is a lot of these adjustments are all the same. All right. So if you can get your head around what's going on here, it will translate for other questions in the future. All right. So what we're dealing here with first, anyway, socket costs on 31st of the 12th, 2021 was 87,000. Now, what that is there, that's your closing stock. All right, because that's your year end 2021. All right. So really, that's what we're talking about here, closing stock. All right. Now, just remember, closing stock goes in two places. All right. It goes to the trading account. All right, trading platform loss account. But closing stock will also be a current asset in the balance sheet then as well. Okay. No record had been made in the books for goods in transit. All right. Now, on the 31st of 12th, 2021, so at the year end, now goods in transit might be what's happening here is goods are in a van or in a container or whatever, but they just haven't been accounted for. There's no record for them. All right, so that's one part of the issue that we have here. The invoice for these goods have been received showing the recommended retail price of 22,500. Right, which is cost plus 25%. All right, so they're the kind of little things you need to be highlighting for yourself. Okay, now the thing with stock is it has to be valued at lower cost and net realizable value. Or net realizable value is just a way of saying how much you can sell it for. So what we need to do then is a little working to kind of tidy this up a little bit. All right, so if we get a little page. All right, and what I'm going to just do is this will be working one. All right, so I'm basing the workings really on the points of the question here. All right, so I'm just going to call this maybe stock and goods in transit. Okay, now. Remember, I said this before to you. I just said a minute ago. Stock, right, has to be valued, right? So must be valued at the lower of cost and net realizable value. All right, those two things really are the two important bits. All right, so the first thing you need to do, right, is find the cost price. of the goods in transit. Okay, now it's easy. It's once you know what you're looking for here, right? The selling price, we can't add that. You can't add that the selling price 22,500 to stock. We have to find the cost price of it because again, the lower cost net realizable value. But we're given the cost plus 25%. So basically, what's kind of happening here is the 25% profit really is included here, right? So we have to bring this back down, and the easiest way you can do this is if we just get to 22,500, right, cost, multiply that. What we're trying to remove is the 25%. So this is one way you can do it. So 25% or 25 over 125, which will give you 4,500, right? So therefore, the cost price is the 22,500 minus 4,500 equals 18,000, and that's your cost price of the stock then. Okay, so what you need to do then is of course adjust the accounts. Right now, it's made more complicated in this slightly because this is goods in transit. Right now, goods in transit has a knock-on effect, of course, because there's a couple of things not being. Also, if there's no record of it in stock, that means there's no record of it in purchases, and we can presume that these are credit purchases then. So we're also missing it in creditors. All right, so that's the big one with goods in transit. Okay, so the second part then is to adjust the accounts. All right, and the first one I'm just going to do is the closing stock. Right, so closing stock. Okay, now closing stock is just an asset. All right, you own closing stock. Right, so to increase an asset, what you do is put the plus sign over the debit sign, minus over the credit sign. So anything we're going to be adding to closing stock here. All right, so first of all, what I need to do is take the figure that we already have that's mentioned in the question here, actually. Right. They've mentioned that at the end of the year it's 87,000. So what I'm going to do is put 87,000. That's what we already have. But then the goods in transit. Maybe what I put is put this in a different color. Maybe goods in transit. And what we're going to do is add another 18,000 to it. Okay. Now that's going to change your closing stock figure. All right, so balance carried down. I'll just kind of roughly do it here, which would be 105,000. Put those two figures together. So really, that looks like that's going to be for our trade account, and that's going to be the figure for the current asset in the balance sheet then as well. All right, so that's the effect that goods in transit will have on closing stock. Okay, now we've already mentioned we've got to add this to purchases and the creditors. Okay, so I'm just draw a purchases account. Okay, and the purchases is an expense account. All right, kind of looks very similar to the asset account. All right, so anything on the debit side is going to increase it. So the trial balance, what we need to do is just grab the trial balance figure for purchases, right? So you had to go back to your trial balance here, okay? And the purchases are mentioned here, right? Kind of halfway down, it's 626,300, all right? So 626,300. Again, what you could say is, I'm just going to shorten it, goods in transit, all right? Now, this is the important bit, right? We can't add... We're not using the 22,500. It has to be cost price all the time here. All right, so don't make that mistake. So it's going to be 8 to 18,000. Now, what I would do if I was you, I would open up a kind of long enough purchase account, and you can use this one purchase account then for all the rest of the workings that you have later on in the question. There could be a couple of entries in this purchase account, so give yourself 6 to 8 lines for that purchase account. And the same with the creditors then. All right, we'll have to adjust the creditors then as well. So, see, this is I suppose this is the kind of the beauty of doing your workings like this. If you just have these T accounts, any workings that you do can be added into these T accounts. All right, you just have to be comfortable with double entry. But hopefully at this stage you're okay with it. The creditors are liability. All right, so liability is any expense that hasn't been paid yet. But again, I'm just going to the trial balance, right? And the trial balance figure for the creditors, right? It's 64,000 there. All right, so I get my 64,000, and I do the same thing. All right, goes in transit. Okay, 18,000. All right, and that's it. All right, there's your whole working then for stock, closing stock, and goods in transit.